Welcome to the Great Scott Show, where homes, hearts, and hometowns come together. Hosted by your local expert and friendly neighbor, Adam Scott from Great Scott Homes. Each week we chat with the people shaping our community. From real estate to real talk, it's all right here. Let's get started!
Hello, everybody. Good afternoon. This is Adam Scott from The Great Scott Show. And today on The Great Scott Report, I have in the studio Catherine Fogarty of the Mortgage Group, who helps buyers all across Nova Scotia. But she's joining me today for this segment to talk about the pilot first-time home buyer program that was just mentioned the other day. Catherine, welcome to the studio.
Thank you.
Thanks
Pleasure
for joining
to be
me
here.
today. Yeah, likewise. So let's start with, we got this new pilot program. Seems exciting. But before we get into that, why don't we just talk a little bit about the differences between the existing program that we have for first-time home buyers versus this new one that is being released. It hasn't been released just yet. Right? Am I understanding? Yeah.
Correct.
Correct, yes.
So the government has developed a solution, seemingly, to the problem that most first-time homebuyers have these days, which is being able to save up for down payment. And the reasons are, of course, the current cost of living, rents, food, and so on. So they're trying to find ways to help that person bridge that gap. And the one that we have had for the last, I want to say 6-7 years, is called the Down Payment Assistance Program, the DPAP as we call it for short. And that one is again, a provincial program only. The federal government is not involved. They had a program prior to that where they matched the equity, the federal, I don't know if you heard about that one. That one has since been scrapped.
Yes.
It's been gone for over a year.
Yeah.
Didn't make any sense. The DPAP does make sense, although the parameters do need to change.
Okay.
So it is a 5%, the government, the province, I should say, is lending the money to the buyer, 5% down that is needed, which is the minimum requirement for anything that is purchased under $500,000. Which that's a federal guideline. That's a separate thing that we could talk about another time. And the 5% is interest-free, repayable over 10 years.
Yep.
So
Which is worked into their mortgage payment,
it
right?
is.
Yes.
So I
yeah.
amortize that amount into what their monthly outflow of payments are. So their mortgage payment plus the payment of that loan. Should they sell the house
Before?
at any point
Yeah.
prior to that loan being paid off, then it gets paid from the equity at the lawyer's office. The parameters of that program are you need to be approved by either a lender or a mortgage broker. So that would suggest that your beacon score should be over 680. That's generally the benchmark for
Yep.
lending. It is
And for everybody listening who's not familiar, beacon score.
that is your credit score.
There you go. Yeah.
In Canada, sorry, we call it beacon on both sides of the border, but in Canada we call it credit score mostly. And once you're approved you're pre-approved by a mortgage broker, we give you the green light to go and find a house, you make an offer on a house, and then we take our finance waiver clause period to go into Housing Nova Scotia and get the stamp on that.
Yes.
I have not had anyone refused through Housing Nova Scotia because they've been approved with me. They're already approved for the program.
Right. Yeah.
Essentially.
Yeah.
The thing we would like to change in that program is that the max household income is $145,000. We need that to go up.
Yeah.
I have a lot of first-time homebuyers who are just over that.
Because the affordability issue also is it's a middle class issue as well, right?
Correct.
Yeah. Is so and 150,000 for household income is just it's not a lot these days.
Correct.
Yeah.
So the other caveat with that program is that, not really a caveat, but as far as a taxpayer is concerned, your investment, while it is not getting interest back, it is helping your community. And should that homeowner not pay their mortgage or their loan and they go into foreclosure, heaven forbid that happens,
Yep.
but it does happen,
Mm-hmm.
that the province will get the money back. That's something I also want you to remember as we're talking about the other
Okay.
program.
All right. Perfect. Okay. Yep. Province will get their money back if the homeowner
When
forecloses,
the house is sold,
sold or forecloses or whatever.
Correct.
But the province gets their money back.
they do.
Okay.
So now we can talk about the 2% down.
So it's a loan from the province, interest free, but a household salary cap of 150,000, and it's 4 homes under 500,000. Correct?
570. So
507. It's the same as the pilot.
the
Yeah.
pilot.
Yeah.
Correct.
Okay.
It is CMHC insured.
Mm-hmm.
So there is that fee that is involved, which
Yeah.
is about 4%. With 5%, it is actually 4%. That CMHC fee is capitalized or rolled into the mortgage, so it's not an extra fee that a person has to pay on top.
Right.
But it means that we have the broad spectrum of lenders to go to. We could go to a credit union, we could go to a TD or Scotia, or we can go to what we call a broker-only bank or monoline lender.
All right. Okay. Yeah, that's right.
And those have all various differences in terms of the product, the payouts, the ability to be aggressive in paying the mortgage down, and all sorts of nuances with those things.
Yeah.
But that gives us the option to go to various lenders based on what my client has told me. So I go through all these things. How long do you want to be in the house?
Yeah.
Are there expectations in terms of cash flow out, cash flow in, long-term goals with the mortgage? Is it just a solution to get into a house,
Mm-hmm.
or do you have a long-term plan?
Yeah. Exactly. Yeah.
So that is the DPAP.
So what are the differences now? Talking about this new pilot program that the province has announced. I know that they're just having this brief conversation. I know there's some significant differences between between those two programs. So let's talk about that, the new pilot program.
So they released the they made a press release, I should say, regarding this pilot program prior to informing the employees at the credit unions themselves, the chosen ones,
Yeah.
before informing mortgage brokers or our brokerage houses or any other entity that could be involved in this.
Right. Yeah.
So a week from the announcement, they're going to come to us, specifically mortgage brokers, with the details of,
With the
of what
details
this is.
of
So
what this program is.
what we know so far is what I'm talking about today,
Yep.
and that could change.
Yeah, and we'll circle back at a later date and talk about that.
Okay,
Yeah.
so what I have heard and what I have understood is that the province is working with select credit unions, and they are offering a non-CMHC insured 2% down mortgage product. So a first-time home buyer, if they have 2% saved
Yep.
plus their closing costs, they can use that to get into a home.
Yes.
Essentially, that's the driver behind this.
Yeah.
It's-
Which sounds ideal.
Sure.
Yeah. Absolutely.
And sometimes if it sounds too good to be true,
There's that caveat. Yes. Yeah.
So the parameters are similar in terms of the house price cannot exceed $570,000. The borrower, in this case, they're allowing for a lower beacon score or credit score to 630, which is quite low, but we would want to find out why it's low. I'm sure that they would do that as a case by case, which that lender typically does.
Yes. Right.
And the income is higher, so the total household income cannot exceed 200,000.
Yeah.
So that is where that could open it up for more households
Yes. Yeah.
to use this product. Now,
So far, So good? Question mark?
The amortization on that is capped at 25 years,
Yep.
whereas with the regular banks, we could go up to 30, but 25 years is the cap from, again, this is what I've
Yeah.
heard. And typically, anything that is not CMHC insured, with most lenders and credit union specifically, the rate premium is higher.
Right, yeah.
And credit unions are higher than what a regular lender would be on a non-insured mortgage.
Yes.
And I tell everyone the reason for this is the calculation of risk.
Of course.
So banks are in the business of making money. Credit unions, although they are nonprofit, they still have shareholders to answer to. They have to make money.
Yeah.
They need to turn the lights on. They need to pay their staff. So
And they need to manage risk. Yeah.
in managing the risk, it's very costly. Every province is different. In Nova Scotia, it's particularly costly. Should a lender have to go and foreclose on a home? In Nova Scotia, we call it foreclosure. In Ontario, I'll use that as an example. We call it a repossession.
Oh, yes.
Similar, but a little bit different as far as what the courts see. So the lenders are looking at a few different points when they're calculating the level of risk for that client and that purchase.
Yeah.
So therefore, the rate will dictate that.
Gotcha.
What I have heard is that it could be as high as over 6.45%,
And that's on your fixed 5-year.
fixed 5 year.
Yeah.
So the other issue that comes out of this not being insured with the minimum of 2% down is that for the first 5, 10, 15, maybe even 20 years, you aren't ahead with your equity
Right.
in any way.
Yeah.
So let's say in 5 years, someone used the program and now they want to graduate out of it and get into a regular lender with a regular rate.
Yes. Yeah.
They may not be able to.
They may not be able to.
So they're going to be banking on their home appreciating enough that they can move to another lender.
Gotcha. And why would they be banking on that? Because they build a pull equity out? Or
Well, they would need to know that going in.
right.
So the question would be to whomever is their financial advisor on this transaction. Do you feel that this house will grow in value in 5 years?
Right.
So, and I will tell you why that is. So if we have a house that is CMHC, and again, there's Sage and Canada Guarantee, they all are very similar.
Yeah.
If they have a mortgage that is CMHC insured, then when it comes time for renewal, I can take them to any other lender, and we call it still insurable. So it's insurable for 2 terms,
Right.
essentially.
Yeah.
And that means that I can move them without incurring a new legal fee and getting them still an insured rate.
Yeah.
So an insured rate today is around 4%. So if in 5 years we're still in that, you can never predict rates, but let's say the best rate is 4% on an insured mortgage, they would just be trailing into that.
Okay.
If it is not insured, then it's considered a refinance.
Yeah.
And with a refinance, according to our federal laws, we cannot refinance any home above 80% of what the appraised value is.
Right. Yeah.
So you need your home to go up by at least 20% to move you out of the CU mortgage, the 2% down,
Yeah.
to get you out of
Right.
that relationship,
Yeah.
which is costing you more money.
Of course. Yeah.
So there you can see
Yeah.
where, you know, as a finance professional, I kind of have a bit of a problem.
But this
with that.
is this speculation at this point until we see the details on it, or is this something that?
Well, this is actually how things are.
Yeah. Okay. Well, no.
These-
Yes. But sorry. It pertains to the pilot program, but yes, this is how things
This
are.
is how
yes.
things are
Yes,
now.
they are. Yeah.
Yes.
Yeah. Absolutely. Yeah. I'm sorry. I guess I'm thinking about if they want to get out of this mortgage they have with credit union.
Mm-hmm.
We don't know what that looks like just yet until we see the details. Once the details on it around that program are released.
In terms of breaking the mortgage,
Yeah.
should they do that or should they not renew at the
Yeah.
end? We have no idea what those details will be.
Okay.
It's essentially contract law. They can
Yeah.
create what they want.
Right. Okay.
Um,
Yeah.
so they may be tied to that lender for 5, 10, 15 years.
Gotcha. Yeah.
And in Canada, and I just rechecked the stats with StatsCan,
Yeah.
60% of mortgage holders in this country do not hold to term. It used to be 65, so it has gone down.
Yeah.
And that is because life happens. So
Yeah.
you grow your family, marital breakdown,
One too many kids.
too many children, they need braces, you need a new roof on the house, or you want to buy something bigger, or then possibly you want to downsize, whatever the reason may be. And
Life happens.
life happens.
Yep.
5-year plan is great, but it doesn't always go as planned. So trying to break the mortgage with the 2% down, that down payment is getting diluted.
Yeah. 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 Well, we'll have to see where the chips lay once they fall, with those extra details that come out. So, I mean, until we know more about the program, right now, what we know is it is 2% down, and it's a loan that's secured by the province, correct?
Correct.
Yeah, it's a loan secured by the province,
And as a taxpayer, it's important to know
yeah,
that should that homeowner not pay and the home has to be foreclosed on and sold,
hmm
the province is on the hook for up to 90% of the outstanding loan.
yes, I got that in my notes here. Yeah,
So after the house is sold, the realtors are paid any interest and penalties on that mortgage. Typically,
hmm
get paid
Mhm.
on a regular
yep,
in a regular situation. That taxpayer has to
yeah,
make up the difference up to 90%. Whereas with the DPAP, if you remember when I mentioned that,
yeah,
we're getting our money back because it's only 5%,
right.
not 90.
Not 90. Yeah. Yeah. Okay. All right. Well, to everybody out there, don't foreclose on your homes if once this program comes into effect.
So then we go back to
But that doesn't happen a whole lot either. I mean, I think for the most part, that's like the last payment people skip out on is their mortgage payment.
You are correct about that. I mean, we are still in the country less than 1%.
Yeah.
It has fluctuated over the last few years, especially since the pandemic and prices and so on.
Yeah.
But in terms of the monthly cash flow, did you want me to just
Uh,
tell you?
Yeah, no, you know what? We're running out of
Okay.
time here, so we'll get into that later. We'll have you back on the show,
Okay.
and we'll dive deeper into all of
Talk
that
numbers.
stuff. Yeah, talk numbers and all that. But for now, we are running out of time. Thank you so much, Catherine, for coming into the studio today. We really appreciate your insight. I know
Thank
that
you.
our listeners are going to appreciate this. We'll have you back in the studio in March, and we'll talk more about it then, and we'll see how this whole pilot program unfolds over the next month, and maybe we'll have some more information to share with everybody then, and we'll get to know a little bit more about you too, and
Great.
Everything that you do. So thanks
Thank
again.
you.
Yeah, thank you. Everybody stay tuned. Up next, the Great Scott Spotlight. Milani Munden joins me in the studio where we talk about everything she does here in the community.